Booming cables and wires. Sometimes the booming sectors are those you don't exactly see. Now, cables and wires have been a hot sector for some time, but the market for them is now growing even faster into areas like power generation from traditional large consumers like construction. Rising demand here obviously also suggests that the overlying sectors are also showing growth, are set to show growth. A new Crisil ratings report says organized cables and wire manufacturers are set to see a successive mid-teen growth next fiscal, building on an estimated 16% increase in fiscal 25. That's 24-25 that's just ended. Now, this would be on the back of rising investment in end-user segments like power generation and transmission, railways, and real estate in domestic markets. That's more than 90% of revenues, and a leg up from the China Plus One strategy being implemented by some of the countries. And there's an interesting part there, which I'll come to. Capacity utilization is 80 to 85% in fiscal 24, that's the year before, and healthy growth prospects led to capital expenditure going almost 70% in the last year, and that's expected to continue. At least the capital expenditure is expected to continue. Crisil looked at about 13 cables and wire companies, accounting for about 65% of the sector's revenue of about 80,000 crore rupees. Now, exports are also expected to be strong, around 20 to 22%. Interestingly, Indian players are apparently being increasingly preferred over their Chinese counterparts thanks to their expanding product range and adherence to global quality standards. And coming back to that capacity expansion, the industry is expected to see about 40% more capacity being added in the coming year. I reached out to Mohit Makhija, Senior Director at Crisil Ratings, who also pointed out that India's combined spend on power, railways, and real estate is expected to rise 25% to about 9 lakh crore rupees or 9 trillion rupees in fiscal 2026. This includes about 50 gigawatts of power generation, 10,000 line kilometers of interstate transmission systems, and Capex in railways, metro expansion, and real estate. The metro expansion and railways is something that we can see right here in Mumbai, as we hope for some of those lines to start working by mid-year, at least in central and south Mumbai. All of this is expected to generate demand of about 20,000 crores for the wire and cable industry in 2026.
The electrical cable and wire industry, typically, if I were to explain it in a very crude way, they roughly grow at a rate which is double the pace of our GDP growth. So if our GDP is growing at about 6 to 7%, this industry, normally we have seen growth happening at a double or maybe 2 times the GDP growth rate, about 14-15%. And this we have seen even during, if we consider last 5 years, period of 19 to 24, FY 19 to 24, it's been around that range when there was some COVID-related fluctuations as well. So what makes this sector, in focus or different is that this time what we are looking at is that we are seeing a little bit of a increased spending happening across 3 major end user industries of this product. One is power generation transmission, second is railways, and third is the real estate sector. Now, if we look at all 3 sectors, the spends that the government is looking to put in and the private players are looking to put in, we are looking at a cumulative spend of close to 9 lakh crores. We expect GDP growth rate to be about 6.5% for next financial year. So confluence of these 3 sectors doing well, along with the general growth that we have seen in the industry, we expect about 15 to 16% growth to sustain over the next fiscal as well.
Right. And I'm going to come to capacity in a moment. So are you saying that we are seeing more growth now than, let's say, in the last 5 years or 5 years ago? Or are there shifts taking place? For example, you talked about power generation versus railways versus real estate.
So there is both happening. There is a little bit of shift happening. We are seeing more focus of the government on power generation. So if you look at the statistics, we have added about 25 gigawatt of capacity per year. I'm talking about maybe last 10 years average. What we are now saying, and this is based on what industry is also saying, we are looking to add the pace of power generation by another 20 gigawatts. So we are talking about 45 to 55 gigawatt. I mean, I'm taking a lower base, say 45 gigawatt. That is one shift. Thermal power additions are leading that. And that is one of the consumers of electrical and power cables. Second also is railways. If you look at the railway budget, it's about 2.65 lakh crore that they are spending, which includes modernization, laying of new tracks, rolling stock. We are talking about instrumentation and control segment, where there is going to be improved signaling systems. So all this is going to lead to a higher demand of electrical cables and wires. Real estate is anyway doing well for the last 4 or 5 years.
And I'm assuming all cables and wires are not different, because the ones, let's say, that you're feeding into the power sector may be obviously bigger cables going longer distances versus real estate, which is more maybe in-house, in building, and so on. So how does that market break up?
If we look at power cables, so we divide it into power cables and wires. So household wires is maybe about 25% of the industry. About 75% of the industry is power cables. And within power cables, there are transmission cables, there are cables used for power generation. So from extra high voltage to low voltage is the range. So from a value perspective, the value of extra high voltage cables is far higher than household segment. So maybe from a volume perspective, I may not have the figures ready, but I think from a value perspective, you can roughly say about 70% of the industry is power cables and about 30% is wires.
And you've also talked about in your report that you put out on this theme about exports and how Indian players are increasingly being preferred over Chinese counterparts. So tell us about that market.
So that is a very small market as of now. We are talking about a sales of less than 10%, which goes into exports. But it is a segment which is gradually becoming of interest, as players in India are expanding their product range and they are increasingly going for global certifications. That market is available. But that market is not, I would say, while it is growing at a much higher pace. So if domestically we are growing at 15 to 16% next year, that market is growing at above 20%. But that market requires a lot of, there is a gestation period, there is a trial and testing period. And some of the larger players are eyeing that market. May not be the mid and the small categories in cable manufacturing, but that market is seeing traction because companies want to diversify. They want to have a China plus one diversification, which is leading to opportunities for Indian players to export.
Right. I started off by asking you about the new capacity announcements that we've been seeing. Now, how does that, or will it change the dynamics of the industry? You talked about a double GDP growth, so maybe 14%, let's say, a growth in the industry. But we are also going to see a lot of new capacity come in going by the announcement. So could that change anything, or how are you seeing it?
Well, not in the short term. Some of the announcements, some new capacities coming up or greenfield capacities coming up can take some time. But I think on an average, if you ask the numbers, we have seen about 5,000 crore of spending happening between financial year 22 to 24. So between these 2 years, we have seen about 5,000 crore of capacities coming up. And for 25 and 26, financial 25 and 26, we are seeing a bump up in this to about 8,000 to 8,500 crore. This includes brownfield expansions as well. So definitely, this is a positive reflection of the growth of the sector in India. One of the things that we normally track is how much is the capacity utilization rate. So if you look at the capacity utilization rate of the sector, currently it is at a higher level of say 80 to 85% in the cable and wires category. And normally we see the levels to be about 75 odd percent. 70, maybe 75 is the top in between that. So obviously with this new addition of capacities, we will see some reduction in capacity utilization levels, but it is normal. I mean, it is something which is acceptable to the industry, as because some of the players are even operating at more than 90% today. So this capacity addition makes sense. And if I go back to the three drivers, which is power generation, transmission, railways, and real estate, all these segments are segments where there is a change which is irreversible. We are going towards Vande Bharat trains. We are going towards modernization of our railway stations. Aspiration-wise, the Indian, consumption story is going towards a higher degree of consumption in most of the products that we use, whether it is consumer durables or real estate. So I think this is an irreversible change that we are seeing, and that is why I think the manufacturers are positive about investments in this sector.
Right, Mohit, thank you so much for joining me.
Thank you very much.